Hey, everybody, it's the Plant-Based Business Hour. I'm Elysabeth Alfano. Thanks for being with me today. Oh, how about those markets? Well, it's up and it is down. Crazy times. What does that mean for plant-based investing? What does that mean for plant-based innovation? What does that mean for the plant-based sector? And can you still invest cruelty-free and have it make sense for your portfolio? We're going to get into it all. I want to bring on my guest, to whom I am deeply grateful, Dave Brett Wasser, the Executive Director of Cruelty-Free Investing. Thanks for being with me today.
Thanks for having me.
So happy to have you with me. Let's dive in because maybe not everybody knows about cruelty-free investing, and oh gosh darn it, they sure should. So just look at the bottom of your screen, folks. And for those of you listening on podcast, it is crueltyfreeinvesting.org. Dave, perhaps you could tell us, what is crueltyfreeinvesting.org? Why did you start it? And when did you start it?
I started it about 5 years ago. And the reason I started it is that I've been investing in stocks and mutual funds for, about 25 years. And about 6 years ago, a light bulb went on over my head. And I suddenly realized, wait a second. I'm investing in mutual funds, which own stock in the very companies that are producing the products that I'm boycotting as a consumer. What am I doing here? And I was amazed that it had never occurred to me until that time. I mean, I've been involved in the animal rights community for years, for 25 years, and it never occurred to me, where were my investment dollars going? I had always just thought that the only obligation, responsibility I had to be ethical was as a consumer. And then it occurred to me, wait a second, there's a lot more to it than that. If Tyson Foods had a choice of having you be a consumer of their products or an investor in their company, I think they'd rather you be an investor in their company. You're giving them a lot more money on that side than you're giving them on the consumer side. So I went online and started looking for ethical investments. I assumed that somebody else had done this. I looked for a vegan mutual fund, and I was stunned to find that there was no vegan mutual fund. There still isn't. There are now vegan exchange traded funds, which are similar, like you have one. But it was startling to me that nobody had done this. I just assumed, like PETA or the Humane Society would have done it. And so then I went looking. So I talked to my financial advisor on Wall Street. And I told him, I'm amazed it had never occurred to me before, but I want to avoid investing in companies that exploit animals. And he said, okay, that's fine. Just give me a list of all the companies that do that. Give me, it's probably a long list, but just give me. And I said, okay. I assumed that such a list would be out there on the internet somewhere. And so I said, I'll find a list like that and I'll get it to you. And I spent about 2 hours on the internet and was stunned to find that no such list existed. Nobody had done it. So I thought, well, there's a niche. Here's a contribution I can make to the movement. Why don't I do it? So I hired a few people to help me. I hired a terrific research director, Alicia Robb in Boulder, and I hired a great webmaster named Steve Zilko in Michigan. And together with the help of a few other people, we went through the business plans of every publicly traded company on the three major exchanges, the New York Stock Exchange, NASDAQ, and the American Stock Exchange. And we put all of these companies, there were about 6,000 of them, into a list, two main lists, a list of companies that do exploit animals and a list of companies which do not. And I can get into, there's a little bit of a gray area for some companies, and I can get into that later. But the point is that we found that about 1/4 of all publicly traded companies are actively involved in directly exploiting animals, either by making animal products or selling animal products or testing, doing experiments on animals. 3/4 are not. And what we did, I created this website, which all of you can go look at. It's free to use. It's crueltyfreeinvesting.org. And there's two main lists, two parallel lists, a list of companies that exploit animals and a list of companies which do not. The good thing is that 3/4 of all publicly traded companies do not exploit animals. And the benefit there is that you can have a diverse portfolio without investing in companies that exploit animals. And they always talk about diversity. Diversity is so important, and it is. You don't, look, the worst thing you can do is just put all of your money into one sector of the American economy. That would be you could get lucky and make money that way, but that's not what anybody recommends you do. You need to be diverse, but you don't need to invest in every sector of the American economy. You can leave a few out and still have a perfectly diverse portfolio. And that's the good news. On Cruelty-Free Investing, every publicly traded company is a clickable link. and you can click on the link and see how they exploit animals. And then you can make a judgment for yourself whether that's something that you can tolerate ethically or not. And the good news is that when I started this 5 years ago, there were no vehicles for ethical investing. There were no mutual funds. Now, the first one was the Vegan Climate Fund by Beyond Investing out of London. And that's basically a passive index of a lot of the companies on our non-exploit list. And then there's what you are doing, which is more innovative. You're investing in more up-and-coming companies, more startups and smaller companies that are innovating in the plant-based sector. The great news is that you can still have a diverse portfolio without having to sacrifice profit. Does that answer your question?
Yes, it does. Yes, and so much to riff off of there. And I'd like to add some color to what you're saying. So much of what you experienced when you wanted to go ahead and invest, and it took you a while, you're saying, to think like, hey, wait, I'm not just a consumer here. Right. I'm actually an investor, and I might even have more power to change or direct or influence through my investing than I even do with my one burger here or there. You know, particularly if you're someone who likes to cook and you're whole food vegan at home, you're making rice and broccoli. Well, wait a minute, folks, that's not directing anyone in a way. So you're choosing where to put your money and making a statement with that money is very important to you. And when I wanted to do the same thing with VegTech Invest, and we have our own fund in the marketplace, we wanted to find those companies that were innovating to replace. So for us, we didn't just want to be cruelty-free. We wanted to be cruelty-free and see that change in the global food supply system. We thought there'd be a list. That's how we started. Right. Or we just assumed there'd be a list. We'd go and we'd Google and we'd find, and we would invest in that ETF that had, looked up those companies along the supply chain that were innovating to replace animals. How could it not be there? And yet it wasn't there.
Well, but you found our site, didn't you?
I found your site. Right, yeah. I definitely. I found your site. Yeah. But I really wanted to focus on. I wanted an ETF that did all the work, that had it all bundled and packaged for me. Right. That did all the work, that would focus on replacing animals. So those that were cruelty-free, but really those specifically designed to replace animals in the global food supply system. And so with sort of a similar strategy than yours, and just to be clear here, everybody, if you go to crueltyfreeinvesting.org, you'll see over 4,500 names of companies that are not working with animals. But of course, that could be transistor radios or something. I'm dating myself. Nobody has a transistor radio anymore, an iPhone, isn't going to be working with animals. But of course, that's also not helping animals in their current state in the global food supply system. So, but that's okay. The point is, crueltyfreeinvesting.org is going to help you put together your own portfolio. You might find that it's a boatload of work, and that's why we had wanted to put together an ETF that would address all of these things. But just to say, I had the same experience that you did, as I was hoping for that one-stop shop, that it would exist already. And then entrepreneurial spirits, both of us, when we couldn't find it and it didn't exist.
And the funny thing is that cruelty-free investing is a value to individual investors, but it's also a lot of value to financial advisors. I think before we came along, what happened was if Merrill Lynch or Smith Barney or Payne Weber had a wealthy client who had this concern, who wanted to invest only in companies which did not exploit animals, Merrill Lynch or Payne Weber or UBS or Smith Barney would hire somebody, have somebody in their office do a lot of this research. But then it would be proprietary research. It wouldn't be shared outside the company. So unless you were a client of that company, you didn't have access to the research, which we make available for free to everybody. So what I found is that cruelty-free investing is actually maybe even more useful to financial advisors. And by the way, we have various tabs on top. One of the tabs is investments at the top of our website. If you click on that, you'll get a list of, you'll get a link to a list of financial advisors around the United States who care about ethical investing and who would be glad to tailor a portfolio for you that will meet your needs as an ethical investor. So you can either go the route of investing directly in an exchange traded fund like the one you run, or the climate fund, or you can have a middleman, essentially a financial advisor, to hand select the stocks And so the emails that I get, I mean, once every few weeks, we get an email from somebody who says, "Oh my God, I found this site. It's so great. I'm so glad you're doing this." And that really keeps me going. It's wonderful that people appreciate it. But we also get emails from financial advisors who say, I just had a client ask me about this, and I found your site, and I'm glad you guys are out there because I didn't know how to help this person. So it's not just the investors themselves who are using it. It's also the people, the professionals in the business.
So that was going to be my next question for you is who is this really meant for? And you've already answered it. It really can help at all different levels of the investing scale, if you will, the average individual, and as well as the registered investment advisor, the wealth manager who's looking to service certain clients. And then maybe even the next level, the banks, as they think about perhaps having this niche promoted, like not waiting for clients to come to them, but for saying up front, hey, clients, FYI, we can do this kind of investing for you. So sort of riffing off of that question, then I'll go to sort of the next, which would be, since you started 5 years ago, what kind of interest have you seen in this area? Do you see it growing? What kind of, because I'll just say quickly, when I started, animal welfare didn't come up that much, although shifting the global food supply system comes up. Innovation to replace animals comes up. But now I'm starting to see, in addition to personal health and planetary health, people are actually putting animal welfare on the list of things they care about. They still need to make a jump between consuming and next step investing, but they're actually voicing that, yes, it's up there with one of my priorities. Are you seeing this?
I'm seeing growth, but slow growth, which is what you'd expect. I mean, look, we're still very much of a niche. I don't know what percentage of Americans are vegan or vegetarian, but it's pretty low. I mean, it's not. I think 1% of America is vegan, and look, I'm realistic enough to know that how that 1% invests is probably not going to make much difference to the bottom line of a company. If 5 or 10% of investors cared about this and made an issue of it, then you'd start to see a real difference, and companies would take notice, and they might think, well, maybe we should change our business practices in order to accommodate all these people who aren't investing in our company because of what we're doing. So we're not at that point yet. The growth is slow. I mean, I think, we have to be realistic that we're not yet at the point where we can really, force companies to change their business practices. If we continue building on this and if more people, take an interest in it, I think we can get to a point where we can. But we're not there yet. And that's okay. I mean, look, you and I are vegan, and being vegan is important, but our veganism is not going to change the nature of animal agriculture in this country. I mean, unfortunately, factory farms are still going to keep going. More people have to join the movement and do it for it to actually have an impact. But you got to start somewhere.
Yes, 100%. And I want to riff off of what you're saying. And we started talking about it. Maybe I want to circle back to it. So many people connect their values with what they eat, or at least they're starting to more and more. But I really want to help, and this is why I'm so grateful for crueltyfreeinvesting.org. And I really have to say, I see Susan Fabricano is giving us lots of comments today. Susan, thank you for watching, and I hope that you go to VegTechInvest.com. Really what we are doing, both of us, is helping people make that connection that you can, with your diet, make a change, but you really can also do that with your investing. In fact, we have statistics coming out on VegTechInvest.org where we see that your investment dollars have 3 times as much impact as your dietary dollars.
Really interesting.
I'll share it with you. In fact, I'm about to launch a press release today. So maybe a little spoiler alert. It's coming. The data, we have paid for an independent study of our fund, and it says that there is 3 times more impact on animal welfare through investing than through diet. So I'll share that with you, Dave. It's very interesting. And I want to share that joy with people in the sense that if they're frustrated, maybe they read the news and they're like, oh my gosh, so much negativity in the world. Oh, you are deeply powerful, folks. It's not just what you choose for dinner. It's where you put your dollars. It's so deeply empowering. And the more we all do it, the more change we see in our lifetimes. Okay. Sorry, go ahead.
No, go ahead.
So Just wondering, sometimes people say, well, I love to invest with my values. But does this mean I have to sacrifice on returns, or what does this actually look like for me from an investment standpoint? So Dave, take it away.
Yeah, I've heard that question a lot. And the good news is that you're not making any kind of sacrifice. You're not sacrificing potential profit by doing this. The bad news is that it isn't really clear that you're going to be making a better return through ethical investing either. It's awfully hard to compare the two sides, but all of the analysis that I've looked at in the internal analysis that we've done, it shows that an ethical portfolio is going to perform about the same as a non-ethical portfolio. There really isn't that much significant difference. I mean, if you look at how the Vegan Climate Fund has done since its inception, it's done a little bit better than the market, but that's only marginally better. At any given period, it might do a little bit worse or a little bit better. The important thing is that, I wouldn't advertise, ethical investing as a way to get rich. It's a way. Investing is a way to get rich. Investing itself is a good thing to do with your money, but you're not going to see much better returns or much worse returns. It's probably about the same. Is that what you found?
I would actually say something slightly different, and that is when one is making an investment decision, there are many layers to that decision. First, you invest according to what is your truth. Don't put your money in things you don't believe in. You start with a universe, which is everything. Then you say, well, I only invest in things that are meaningful to me.
Yeah.
Now, once you've decided to invest in things that are meaningful to you, you decide, do I want to go innovation and growth? Do I want to go value and, less growth, but more value? Then you start putting together, you layer on top of that personal decision to you, you layer your investment strategy. Am I going for, faster returns that are more risky? Am I going for slower returns that are more stable? You decide where you are in your time frame, given, do you have children? Are you going to retire? All the regular investment logic and criteria would then be layered on. So our investment strategy is we're focusing on innovation.
Yeah.
Innovation, like the tech sector, tends to be slightly more risky, slightly more growth. Other things might be more broad sectored, and they might be less risky, less growth. So you decide where you are and you make your returns accordingly. Your investment structure doesn't change. You just limit that universe, which is enormous. We just listed over 4,500 companies, for example, and that's not including all the companies that we know are going to IPO. As soon as the market levels out, we're going to see more plant-based IPOs, et cetera. So that list is growing, is my point. And your list, again, to be clear, that 4,500 is mostly companies that are not making animal products. And then there's all the companies that we're investing in that are actually replacing animals. So innovating for replacing. So our point is the list is growing. The universe is quite large. And from there, you decide what's important to you. So you get the returns you want as an investor. It's not really related to if it's ethical or not. Would you agree with me, Dave?
Well, I was simply talking about the potential for profit. And if you have a diversified portfolio, you're going to get both some of the riskier stuff and the stable stuff. The idea is to have a combination of it. Generally speaking, I would recommend that people look towards the long term. The biggest mistake people make investing is they only look, what's the stock doing this year? What's it going to do next year? And unless you're one of these people who gets in and out of the stock market, frequently, which is awfully risky, all of the advice that I've heard over the years, including, by the way, from my grandfather, who was a stockbroker and who I was named after, strangely enough, is that you have to look long term. So much attention on Wall Street is paid to what these companies, what their quarterly return is, and the quarterly return. It's a piece of information which you can use in determining whether a stock is worth investing in, but it's not the primary information. The primary information is not where it's going to be next quarter, but where is it going to be in 10 years. Most people really need to. The best strategy overall is to buy and hold. Just buy it and hold it forever until you have to sell it. Yeah, and generally speaking, if you do that, you're going to get stable returns. I mean, yeah, if you want to try something riskier, that's what you're interested in, go for it. But most people are looking for stable long-term returns.
Well, this is why I say, when people are investing, it's not all money in one pot. So one might decide to be in the S&P 90%, and then 10% to be in their innovative strategy to replace animals, or in their, broader based strategy to replace animals. And or it might be 3% in electric vehicles, 3% in alternative energy, 3% in replacing animals. There's many ways to vote with your dollars, so to speak. And that doesn't mean getting out of the S&P 500. So right. You're diversified in the way that ETFs are lovely diversified, but even beyond an ETF, you then have many ETFs, and so even your buckets are in many buckets. So, and if you are looking at retirement, for some people, you might be looking at your long-term might be 5 or 7 years, depending on when you're retiring. Your long-term might be 35 years. This is why I say one's personal investment strategy then just gets layered on top of what's meaningful to them.
Yeah. Okay. By the way, one thing that Cruelty-Free Investing, we offer tools to let you sort the database via all sorts of parameters. Like you can just look at a list of Fortune 500 companies, or the S&P 500, or just NASDAQ companies, or just companies in an individual economic sector. Unfortunately, most people who visit our website don't really use those tools. So I'd like to encourage people to use them a little bit more. It's a useful way to just, if you're looking at a specific sector of the economy and you want to see which companies fall into the exploit category and which companies do not, that's a good way to do it. So I think long-term investing is always the best strategy. Go ahead.
And that happens to be exactly the opposite of where we are now. The markets are so focused on, it's practically down to a granular hour by the hour. I exaggerate not. So the opposite of long-term perspective happening in the market today, which brings me to, where do you think we are headed the next 3 to 5 years? I mean, nobody knows the future, but go for it.
No, nobody does. Look, the market is having a correction. It always does. If you look historically back in the last 100 years, the market always, every 5 or 10 years, there's a correction. It goes back. And again, this is why you want to be a long-term investor, because if you're only thinking long-term, you don't have to worry about where it is this year or next year. Worry about where it's going to be in 10 or 20 years. And as for the next 3 or 5 years, look, I don't know how long the current correction will last. Nobody does, but it's going to be over eventually.
Amen.
Although, I mean, look, technically, yes, yes, the market could be exactly in the exact same place it is 10 years from now as it is today. But historically, that's very unlikely. I think if you look back at Richard Nixon, by the way, is the only president where the stock market was lower when he left office than when he came in. But that's the only president. Every other president, the stock market has been higher, which tells you, that ultimately these short-term corrections are not really much to worry about.
Yeah, which goes back to Dave's comment, buy and hold, and play that game for as long as you can. And I would just add to that, according to your values, and then according to your particular investment comfort level. Okay, so we don't really know where the future is going, but I think we're in for some tricky business for a quarter, 2 or more. But we shall see. We shall see. Yeah. So as we wrap up here a little bit, just to give people a better understanding for you personally, the executive director of Crueltyfreeinvesting.org, what do you wish you knew 10 years ago that you know now?
Oh, gosh. Okay, and this has nothing to do with investing, but this is an open-ended question, so I can answer it. I've come to the conclusion that when you complain about something, you're associated with the thing that you're complaining about. Ultimately, when the listener associates the negative things that you're complaining about with you, which is why you got to be very careful when you complain about something. And I'm not suggesting that people not complain about anything, because you have to complain sometimes, but you have to be very selective, because the listener is often subconsciously or unconsciously associating the thing that you complain about with the complainer, with you, the complainer. And I don't think I didn't recognize that until recently. And I think most people don't recognize it at all, that you're going to be associated with the thing you're complaining about. Have you ever thought about that, by the way?
I'm slightly stunned, if that's why you see my face is kind of like pale and sickly. I'm thinking this through in my head, and I'm gobsmacked that I haven't thought about this before. But
Yeah.
I'm like, the reason I'm sort of not speaking is because I'm thinking in the back of my head, oh, this time and this time and this. I think you're right. I think you're very much right.
Yeah. Yeah. And so, yeah. And you think that when you're complaining about something, you're only changing the only, saying something negative about the thing that you're complaining about, but unfortunately, you're also saying something negative about yourself.
Yes.
Even though completely unintentionally.
That might be the best. I ask this question at the exit of every interview. That might be the best answer I've ever had. At least it's an answer that I'm going to hold to. And I consider myself a pretty happy person, quite frankly. I'm pretty smiley all the time, but I'm going to hold that one near and dear. Okay, running down my list. You're having a bad day. Things just aren't going your way. What is the phrase you say to get yourself back in the groove?
I'm a big believer in the fact that honesty is ultimately the way people get better. The world improves in direct relation to the number of people who are willing to be honest with themselves and with others. And there's a quote from Oliver Wendell Holmes, which I always loved. He said, "Sin uses many tools, but a lie is the handle on each one of them." Oh. And I've always felt, look, honesty really is the best policy, even when it's awkward to say, even when potentially you're hurting someone's feelings. Ultimately, people will respect you more for being honest. And I've always wished that I try to be honest. There's sometimes occasionally when I haven't been, and I always end up feeling guilty about it. But all of us need to put most effort into being honest, even when it's uncomfortable to do it.
Maybe you should also write philosophy books. You could do investing guidance, and you could also do philosophy books. I think
I went to graduate school for philosophy, actually.
Oh, you did? Well, that certainly shows. Okay. Dropping some words of wisdom here on the Plant-Based Business Hour. Okay, so same day, you're running around like crazy. You didn't have time for lunch. What is your go-to snack?
I'm a big portobello mushroom fan. I just love portobello mushrooms, and I always look at it. There's a menu. There's a portobello mushroom sandwich on a menu. Chances are I'm ordering that. Yeah.
So what I do is I take portobello mushrooms and I put them in a small pan dish, and I fill that pan with soy sauce and rosemary and garlic. I bake it for 30 minutes. I come back. That is my meat. I put it between bread, and I'm ready to go. Oh, I add a little bit of red wine vinegar, just a dash.
Right. Yeah, that's a good.
Very good. Yes, very good. And my last question for you: if we drop into your house unexpectedly, what are we always going to find in your fridge?
I am a big fan of the combination of lemonade and iced tea. It's often known as an Arnold Palmer. Have you heard it called that? Arnold Palmer. I have in my refrigerator, I usually have at least 3 to 7 bottles of lemonade iced tea in there. Like then I'm a connoisseur of each of the different brands of it. Like there's Gold Peak, there's Snapple. That's my go-to drink. Yeah.
Oh, wow, that's amazing. Okay, I really like lemonade, but it's fresh lemonade. So lemons that I squeeze myself, and beer.
Oh, okay.
So I do half beer, half lemonade. And
I used to have a lime tree on my property. And do you remember in February of 2 years ago, we had what was known here in Texas as the snowpocalypse and the power.
Oh, yes.
There was 4 days where we had like 15 degree temperatures, and the poor lime tree died in those 4 days.
Oh,
it was so great because I could always I gave me like 200 limes a year. I could always had fresh limes, and the thing couldn't last those 4 days.
Can you replant?
I could do that. Yeah.
Yes. Okay. Oh, my word. Well, I hope that you will come back, because the markets will change and we can talk about it all again. But hopefully, if you've learned anything here, folks, it is that you are incredibly powerful, not just with what you order for dinner. And thank you for doing that, but with how you invest your money. And if you decide to invest alongside your values, many people call it impact investing. So investing for change. If you invest for the change that you would like to see in the world? I know that I do. Our strategy with VegTech Invest is to invest in the companies that are innovating to replace animals from the food and material supply chain. But, you invest according to your values, and a way that might help you is going to crueltyfreeinvesting.org. You will see change. I really do believe this. If you live your life according to the values you want to see in that world, so you order only what you believe in on the menu, you invest in only what you believe in, I really do think that you will see change. And certainly Dave and I are here to help with that. So everybody go to VegTechInvest.com and Crueltyfreeinvesting.org. Dave, I want to thank you for being with me today.
Thank you for doing this. Thank you for creating your fund, the VegTech Fund, which I, by the way, personally invest in, and I recommend it to anybody. And thank you for doing this show.
I so appreciate it. You stay put. You don't go anywhere. Everybody on Facebook, LinkedIn, YouTube, and Twitter. Thanks for all you do, everybody. I will see you all next Tuesday.